Today in crypto. Among the many reasons Bitcoin turned bullish in 2020, was primarily due to the designed it to be. The richest individuals in the world are now buying Bitcoin to prevent their wealth from evaporating into thin air. And if inflation expectations are only now breaking out from a 10-year downtrend, Bitcoin's uptrend might only just be getting started. Related reading: Why investors are spending stimulus checks to buy Bitcoin from the time stimulus money began flowing in response to the pandemic. Through now, the leading cryptocurrency by market cap has grown nearly 800% and added billions to its market cap. From inflation fears alone, it's easy to see how analysts have come up with such lofty targets for the price of each Bitcoin long term. Responding to a tweet from billionaire Chamath Palihapitiya, Mark Cuban said he would run as a United States presidential candidate, under a specific set of circumstances. "I'll run if BTC gets to $1 million and we can get commitments to donate 350 BTC to the Treasury each of the 4 years so that we can give 1 Satoshi to every citizen each year, that they must hold for 10 years, the Shark Tank star tweeted on Tuesday. Continue reading on Cointelegraph. According to an announcement from the Office of the Comptroller of the Currency, OCC, U.S. banks can now use public blockchains and stablecoins to execute payments and other bank-permissible functions. The OCC is a part of the country's Treasury and one of the largest banking regulators. Following the new guidelines, American banks would be allowed to take part in what the regulators dubbed Independent Node Verification Networks, INVN. For the uninitiated, this simply means public blockchains. Acting Comptroller of the agency, Brian Brooks admitted the speed and low fees associated with blockchain transactions. He said, "Our letter removes any legal uncertainty about the authority of banks to connect to blockchains as validator nodes and thereby transact stablecoin payments on behalf of customers who are increasingly demanding the speed, efficiency, interoperability, and low cost associated with these products." Whilst the new development may seem like a win for digital assets, it is worth stating that U.S. regulators have been pushing for increased scrutiny on crypto transactions. For instance, the new Stable Act would require issuers of stablecoins to obtain a chartered banking license and submit to checks from the Federal Reserve. Wallets holding oversized XRP positions are plunging quickly in the wake of the United States Securities and Exchange Commission's lawsuit against Rippe. Industry data reveals just how quickly these so-called XRP whales are sinking. Coinmetrics, a leading data provider on all things cryptocurrency and blockchain, estimated that the number of wallet addresses holding at least 1 million XRP has dropped to 1,567 from 1,721 between December 21, 2020 and January 3. In other words, it appears that XRP whales are liquidating a portion of their holdings amid regulatory uncertainty surrounding Ripple. Continue reading on Cointelegraph. By Yashin Ibrahim. Bitcoin surged to remain close to record highs Tuesday as investors continued to buy the dip following early day weakness, suggesting the popular crypto has more room to grow. Bitcoin rose 6% to $33,545, just below its all-time high of $34,253 as investors bought the weakness seen earlier in the day and on Monday when the popular crypto fell below $30,000. JP Morgan, NYSE, JPM, made a bold Bitcoin call on Tuesday, claiming the cryptocurrency can mount a rally to $146,000 on its potential to rival gold as an alternative currency. Bitcoin has its work cut out if it is to challenge gold in the private sector, as its market cap would have to climb by 4.5 times to $2.7 trillion. The wild swings in the price of Bitcoin prices, meanwhile, would likely have to steady for cryptocurrency to attract the institutional investment dollars that will support a sustained surge in market cap, and with it a rise above $100,000. JP Morgan added, "This long-term upside based on an equalization of the market cap of Bitcoin to that of gold for investment purposes is conditional on the volatility of Bitcoin converging to that of gold over the long term." Bitcoin is up 16% for the year after rallying more than 300% last year, driven largely by demand from institutional investors faced with a need to hedge the ongoing currency debasement as central banks persist with monetary monetary policy easing to boost their respective economies. The meteoric rise in Bitcoin demand, however, has not filtered through into altcoins, those with far lesser market caps and likely to be viewed as illiquid by institutional investors, in a meaningful way, as Bitcoin makes up nearly 70% of the entire crypto market. Ethereum, the second largest crypto by market valuation, is about 30% below its all-time high market cap seen in the previous rally in 2018, but some point to signs that the demand is starting to trickle through to other areas of markets. What we're seeing is the standard moving of the crypto markets from Bitcoin to the altcoin market led by Ether, said Vijay Iyer, head of business development with crypto exchange Luno in Singapore. According to Bloomberg, this rotation happens usually when Bitcoin has a large rally and investors rotate profits into other digital coins. Ethereum rose 4.59% to $1,088.90. LTC/USD climbed 3.6% to $156.05, and ADA/USD was up 16% to $0.251179. Hit the like button and subscribe to the channel.